Next article, guys. Homeowners are staying in place twice as long as they did 20 years ago. Surprise, not surprise.
Hello, surprised.
Coming in from Redfin, the report derived from census data shows that today's homeowners are staying in place for a median time of nearly 12 years. So all homeowners above and below 12 years is the median time that people are staying in their home.
I believe
That's
that.
crazy.
I believe that. I do believe that. And I'm going to tell you why. When I was younger, I was I felt more resilient and wanting to take more risk. So I remember, hey, I was in this house. I think I need a bigger house. And then we ended up getting a bigger house. And it was like almost every 2 years. Mm-hmm. This last home, we purchased it back in, towards the end of 2012. And I've been in there. And it's like, do I need? Now I'm understanding a need versus a want. And so now I kind of contemplate, do I really need that? I want a lot of good things. Trust me, I like it. But do I really need that? Do I really need it? And so I think it's going to keep me in place here in my current home for a long time. Why?
Yeah.
I got a very nice, comfortable payment, and I have a home large enough.
Yeah.
I was able to do an ADU, bring my in-laws in there. And now to actually find that home that actually can cater to both families, I think it's a little more difficult to do.
Yeah, that it is.
And the cost.
You're at the you're at the 10-year mark now at that house, right?
Actually, no. Well,
2012. You're at the.
Oh, okay. I thought I had the year wrong.
Passed,
Sorry.
Yeah, passed.
You're right at the 12-year mark.
There you go.
Oh my gosh.
Well, do you need to move?
That's still longer.
Hey,
are you moving soon?
Yeah.
His new show nickname is gonna be Median Memo. Median Memo.
So I could agree with this. Okay. I think more people are doing it. They're seeing it more or less like this is a longer term thing.
And my argument was going to be the cost of prices going up on houses. Obviously, before they were a little cheaper, maybe your compensation made for you to be able to jump around. But now, as we know, and we've been following the data, incomes haven't gone up enough for them to support house prices. So that's probably a huge factor as well.
Yeah.
And, this article is citing that the length of time homeowners are remaining in their properties doubled to 11.9 or 12%, or 12 last year, up for 12 years, up from 6.5, which was in 2005.
Wow.
So just shy of 20 years ago, it's flipped double almost in that amount of time.
It's ridiculous.
And we used to say not everyone, broadly, most people would refinance every 5 to 7 years.
Yeah.
I think that's now going to change next. So I think another order of effect is that 2020 and 2021 and early 2022, all those refinancing half the planet. I think that people are going to keep these loans for way longer than that. Because why are you going to get rid of 2.25 if there's like not even an inkling of chance that we're going to get under 3 again in the next year, 2, 3 years?
No, I mean I understand history repeats itself, but we're not seeing that.
Well, not unless
we get another black swan event type of COVID.
Here's what's crazy, guys. We listened to this podcast from Canada. You remember that, Brian?
Yes.
Yeah.
And I mean, when they're considered their 30-year fix is a 10-year.
Yeah, 10-year fix.
And the average homeowner refinances every 2.5 years.
Yes, and it was like 8% was like the average rate or something
right
like that,
now,
right?
currently. Yeah, 7.5 to 8%, depending where you go with the 3-year ARM, 5-year ARM.
Yeah.
ARM. This is an adjustable rate mortgage, not a fixed mortgage.
Yeah,
it's crazy.
Yeah, and so I think as a second order effect, you're going to see people refinancing less.
Yeah,
and then that's going to because again, if they are already let's say less than 4%, even let's just go to 4%. Yeah. If they have a first at 4% or lower, there is no incentive to refinance right now unless you are literally getting yourself in trouble or some life event is happening that is unplanned and unexpected, and you don't have a backup solution for. You lost your job, death, divorce. Whatever, dismemberment. Let's do other D words. Hey, how about I just said dismemberment?
Yeah, dismemberment, displacement.
Yeah, but so disability, death, divorce, debt, that kind of thing. Again, but even then, you still have like a lot of equity in homes. There's a line of credit that's an option. I think refinancing is going to be really, really hard to come by.
Unless you're from 22, 23, you can't wait till the rates drop and you need to freaking, drop your rate because you got a 7+.
I do have a client that's actually PCS into San Diego. They have an investment home. So we're refinancing them out of that VA.
Oh, okay.
Right? And the rent's going to cover it. So their current payment's $3,200.
Yeah.
Their rents are $3,800.
Yeah.
The payment, they do have not a 2-point-something. They had like a 4.25% interest rate, so we're refinancing them to free up that VA. Yeah. The payment's going to be $3,800. It's going to go up that high, but they're okay with that because they don't have enough money to put down as a down payment.
Got it. And
I'm like, do you guys have the 5%? No, we don't have that. well, then let's do this. And they're like, perfect.
Well,
the rent's still
see,
covered.
That's
Yeah.
that's
The
purposeful.
payment, I'm sorry. Exactly.
That's purposeful because you're freeing up their entitlement. That's a whole different conversation.
Yeah.
No, but you're
Yeah.
you're stating unless certain life events are
Exactly.
happening.
That's
And
a
so
certain
I wanted
life
to
event.
just illustrate a life event of this case to give kind of some people the idea.
That's
of-
a no. That's
really
I'm
good.
glad you brought it up. It's a perfect
Yeah.
example. I don't mean to argue the point. I'm saying
Yeah.
that like that is the kind of thing where it's conditional because of this other thing I'm trying to do.
Yeah.
Or in some cases it's a problem I'm trying to avoid, but in this case it's an opportunity I'm trying
Yeah.
to unlock. So there is the opportunity unlocking part of this, which I'm glad you said that. I didn't know what was going on.
Yeah.
So that's a great example. And again, this is even a case of keeping that home. So, this is people staying in their home, but this is someone keeping the home even though they're not staying in it. They're
That's
still
it.
keeping it and they're not selling it.
Yeah.
So that's them converting it from the primary into an investment property, which we've talked about generationally more people are doing. Also, people are getting wiser about how I leverage this debt over here to make this asset grow over
Yeah.
here, let the market ride that property value up over the long course of time. And if they're PCSing, guess what? There's someone else PCSing
Yeah.
in. Like, I get it. That makes a lot of sense when
Yeah.
you put that out. Like
And this,
that.
what's funny about this situation too, was not funny, but this is the fourth conversation that I had with this family. They both have 2 kids. So like, what made you want to not sell that? Like, we need a kid for each of our kids. We need a house for each of the kids.
That's smart.
So that's what they're going to inherit. So these kids are going to be inheriting these properties in time. You know
Well,
what I mean?
we talk about this when we talk about legacy. We talk about building
Yeah.
a family trust and an estate plan, and like actually
Yeah.
using real estate to leverage your family wealth over the course of time, and that transitional wealth from generation
Yeah.
to generation. Like
Yeah.
that this is the plan with people.
And we're just on the sidelines, I'm like that Mexican chant that they do. Sí se puede. Sí se puede. Like, yes, you can. Yes, you can. Yeah, we're getting it done.
So before we leave this article, guys, I was surprised, not surprised. 54% of baby boomers own their home free and clear without making monthly payments,
Except for the property tax.
Except for property tax
And homeowners
and
insurance.
insurance. But there's no mortgage. Like that's crazy.
Yeah, I
that's part of the equity conversation about there being so much equity, like compared to historically, highest equity on tap. And then also that's a lot of people.
I can attest to that.
54%.
Like, listen, I can attest to that. I have a client right now. They're purchasing an investment home for their daughter. And their current home is free and clear, right? Free
Wow.
and clear. Fits in the baby boomers. Here's a crazy thing, though. We talked about they're paying property taxes. But in this case, I told you earlier, he is not paying homeowners insurance.
Oh, this is that story?
That's that story. Guys, so if you own your home free and clear, make sure you have
Get insurance.
homeowners insurance in there. He didn't understand why he needed to have that insurance in there. And I'm like, come on, protect
All right.
your investment.
Hey, that's-
in case of fire, in case there's an internal flood in there.
Oh, wait. Well,
internal flood, right? We
internal,
already know
yeah,
if
yeah,
it's
yeah,
flood
it's
from out there, that's FEMA.
He hit
something else.
FEMA.
Right?
Wow,
But
okay.
if you own your home outright and you're listening to this, go talk to your homeowner's insurance agent and get your home insured.
Yeah.
Okay? So
my gosh.
wanted to share that.
Well, that was yeah. So the amount of baby boomers who are free and clear was again surprising, not surprising, because again, what they were taught and what was expected is you work hard, you pay off your bills, you carry no debt, and you pay off your home, and then you live in your retirement years on whatever retirement you have. It's going to be enough because you don't have a house
That's
payment,
right.
you don't have personal debt, you buy your cars cash, like all that kind of stuff.
Yeah, that was the old blueprint. Now the
So-
new
Right.
blueprint is different.
So I was gonna add to that. Like baby boomers starter home back then is a lot different than a starting home for a Gen
Yeah.
Z and millennial. Like back then you actually got a house. Now you get a little shack.
Yeah.
You get a little apartment if you can if you can get that.
Yeah.
So I think that makes it a lot different for millennials and Gen Zs. Having the opportunity availability to be able to purchase a house because it's no inventory. It's more expensive.
Yeah, it's just making these younger
reality.
guys a lot smarter, social media.
Yeah.
They're understanding what good debt is.
So, and then it was funny because I saw that. Okay, so then the homeownership percentage of millennials and compared to Gen Z, compared to baby boomers and Generation X differs a lot. But I think it's because of the behaviors and the different motivations that we have growing up. They were looking at it different. Well, now it's like if I have a Gen Z millennial that has equity in their house, they're going to be like, how do I take this out and go
Yeah.
somewhere else?
Well, I think
That's-
And keep this still.
That's the generation. That's the generation with the most wealth.
Well, part of it is conditions, the conditions that set the table for them to have home ownership
Yeah.
at large and broadly, with accessibility on a single income, which is mostly now not the case, where it takes 2 incomes and then a side hustle or something.
2 incomes, Andy?
Yeah, two-
Are you being modest
I'm
here?
trying to be modest. Yeah, okay. It takes 9.
Side Side hustles is
9
kind of like your,
incomes.
3-4 applications.
It takes one income per day of week. 7 incomes to qualify.
Yeah.
So I think a part of it is the conditions that set the table for them to acquire homeownership. Number one. Number two, I think the other is behavior.
Yeah.
I think it has a lot to do with just generational
Yeah.
exposure and behavior
Absolutely.
to what are the
100%.
cultural norms
Yeah.
that I was raised up with and I aligned and grabbed onto in my most, let's say, in my most influential years
Yeah.
of making personal decisions about how I'm going to carry myself into adulthood
Yeah.
and through adulthood.
No, absolutely.
So
absolutely.
there's a culture part and there's a condition part. So
Yeah.
baby boomers, man.
Booming.
And
Gen
40
Xers.
What they say, like 40%. I think articles like 40% have owned their house for 20 years or more.
Yeah.
That's all. I mean, you're talking all the way about 2004 now, pre-collapse.
Yeah.
And they still have.
And they still
that
kept
house.
it.
Yeah.
And they still kept it.
They huddled.
Yeah, hunker down. Dig your heels in.
Yeah.